Hey, it's Mac with PriceActionTradingSystem.com, and this is Wednesday. It's March 4th. This will be our chart lesson for the day, and another pretty wild day. Maybe not as many quick reversals as what we had, especially maybe from 11 o'clock on. It was just all an uptrend. You didn't get a lot of chances to enter some of this big move here, but the interesting part is if early this morning it would have been hard to imagine us getting a measured move up similar to this one. But if you measure this leg right here and you start from where the low was, which is right here, you can see we pretty much got a measured leg up before this day was over. And I mean, that is a huge leg. 30 to 30, I mean, it's basically 100 points. Uh, so 100-point move. So from the overnight lows to the highs of the day is 200-point move. And we talked about that the other day. I talked about how you can take advantage of that, maybe using options instead of trying to trade this with normal contracts. So just something to think about. I'm not going to get into that again today, but really most of the early morning was just sideways. And you could, actually early on, this is still down. You can see we started turning down here maybe around 5:30, 6 o'clock, and we traded down until a little after 9. And we're starting to go sideways, but this still has a downward, so you can see it's mostly shorts in there. And then we were just sideways here until about 11 o'clock, and then it was all uphill. We actually had a little more sideways action here too, but it was mostly uphill. So, um, but we spent a great deal of the morning, really at most of the morning, going sideways. So even here, there's somewhat of a sideways um, feel to it, but there is a downward bias there. Here, I'd say we're just kind of neutral. So, but it's kind of hard to see, but here's where the day started. And here's your overnight low. You measure that first leg. You look for where we started higher again, which was really right here. And, we get basically a perfect measured move up, even on a day like this. So it's hard to imagine that, but it happens. So it's amazing how often you can, get an accurate target with that stuff, with trying to find those measured moves. And we definitely had one today. So didn't surprise me that we went higher. It did surprise me we got a measured move though. So even I was surprised at that. But that I just tell you how often that works and gets you really close to the target. It's amazing how well it works. So just keep that in mind. And if you don't know about measured moves, then you need to study about them. So if anybody tells you that market geometry is not real, don't believe them, because I show this every day in here that market geometry is very real. And that's really what these channels are about, market geometry. You'll have a resistance area and a support level, and prices will bounce back and forth in equal moves between those. So it happens at almost every level. So just be aware of it. But I'm going to back out. We'll go through the trades. Again, there's so many trades. And again, I probably won't talk about all of them because there's so many. I'll talk about the best ones. There may be some that you saw you liked that maybe I didn't mark. It doesn't mean that it was necessarily a bad trade. It just means it probably wasn't a great trade. At least it wasn't on my chart. And, sometimes it might just be a signal bar issue. And I'll talk about that in a moment too. I get so many questions about signal bars. What's a good signal bar? What's not? And basically the gist of it is that a good signal bar is a signal bar that's a trend bar in the direction you're entering. If you're going long, you want a very bullish bar to go long for your signal bar. If you're going short, you want a very bearish bar for your signal bar. You don't want a neutral bar to go long or short. You don't want to be going long on a bearish bar like this, and you don't want to be going short on a bullish bar like that. If you're trying to go long, you want your signal bar to be a bullish bar. It's basically that simple. It's nothing more than that. It doesn't have to be perfect, but it still needs to be bullish if going long, bearish if going short. The only time it doesn't matter is on a trap. If there's a trap, sometimes like a failed second entry long, like right here, notice I'm going short, but that's a bullish bar. Doesn't matter there because it's a trap. And notice that high, there's a first entry, there's a second entry. So that's a failed second entry long, which usually will lead to a big move. It didn't in this case. It still got you your scalp, but it didn't turn out to be a big move. But that's why we don't care about the signal bar in that case. But that's the only time on those failure reversals. Otherwise, we want the signal bar to be a trend bar in our direction of entry. In other words, if the trend is up and we're entering to the upside, we want the signal bar to be a bullish bar as well. And if the trend is down and we're entering in the down direction, like right here, you want your signal bar to be bearish. Simple as that. Nothing more to it than that. So, and you can see that's a perfect bearish bar. It closes on its very low. I didn't mark this trade. It is a failed second entry long. Notice that new high, first entry and second entry, but we're so far away from the EMA. It is a breakout pullback short too. That's one of the ones I didn't mark it. You could argue for it to be green, but we've had a big move, and generally you want a little more correction than that. But the way the market's been, as bearish as it's been, and there is some support across here as well. So you can see that support across there. So there's another reason I'm not crazy about that one. I didn't count how many ticks, but there may be enough to get out there. So it may not have mattered anyway. But generally on a normal day, you wouldn't want to take that trade into that support most likely. So you'd want to be able to get in a little higher than that. But anyway, I hope that makes sense. I'm going to back out a little more and we'll go through each trade. And again, I'm going to move through them pretty quickly because there's a lot of them. So normally, when we have more of a normal market, and it doesn't take me 30 minutes just to fly through every trade, then I'll spend more time on them. But right now, it's taking me 30 minutes to do a chart lesson, and I'm going through them pretty quickly. I mean, we could easily spend an hour or two on these charts lately, and I just don't have that much time, unfortunately. So. And somebody asked me today too, when are we going to be back to a normal market? Well, I wish I could answer that question, but the market will answer that for us. This is very unusual. I mean, it's not unusual to have periods of high volatility and periods of low volatility, but this is one's carried on for a while now, really all year since January, maybe even started back in the end of last year. But it's been super volatile the last few weeks, mostly due to this, they're blaming it on the coronavirus, which is, spooking people, and it's affecting the economy in important parts of the world like China and Southeast Asia, where a lot of our electronics and things are made. So, so the market's spooked. So just be aware of that. How long it's going to last, I don't know. We'll just have to see. The market will tell us when it's, you'll know when it's starting to subside. And we've had a couple of days where it looked like it was going to subside, then boom, it picks right back up again. So we're in an election year as well here in the United States, so that could affect the market. I mean, it's a pretty large political divide right now in our country. So just this election could have a lot of volatility on the market as well. When you get a 50-point unexpected out of the blue rate drop, that's a big surprise to the market. That can cause it's just a lot going on right now. This is and it could get worse. I mean, we could get more volatile before it's over. So just be prepared for that. But anyway, I've already got 8 minutes, almost 9 minutes in here, and I didn't even start to talk about the trade. So I'm going to stop talking. We're going to go through the trades, and again, I'm going to move through them pretty quick. So just you might have to go back and watch it a couple of times if it doesn't make sense, but I'll try to explain them as best I can, but as quickly as possible as well. So, okay, 7 o'clock came on this down move right here, and you don't want to be going short down here, so we're just kind of waiting on a correction here. You get a second entry right here, but you can see that's a very neutral bar, not a very good setup. It did break higher first, I believe, and then turn down. But I wouldn't recommend entering there. I would wait on something because you still got that trend line working up, and it's just too big a chance that you enter short here and it goes higher. So, and you can see if you got in there, it would have worked, but it's just not a very good setup. And you see, you go short once, You try to go short again and it fails, and you get a second entry long, which that's the first break of this channel. There actually was a little break back here, but a lot of times you in the overnight you can't pay much attention to that, especially when we were still following that here. So the odds are we're probably going to try a retest here. So if you get a setup to the long side, by all means, you probably want to take it. And that's a pretty good setup. It's good for a scalp. It doesn't continue on. And then notice what happens. We just kind of go into a range here is what ends up happening. But notice that high, and you come back here and you test it once. You turn down, you come back. So you get a double test. You get a lower high here. This actually breaks higher and turns down. I like going short right there. I don't know if I'd enter down here because it limits your room to get out, but no problem when it broke higher, when it turns back down, going short right there. You get another, like a failed second entry long here, but I wouldn't take that, not inside the middle. This looks like a range now, and you're right in the middle. You actually get a little failed break lower here, and this is a nice bullish bar, but you got to go long right into the EMA. And that's a huge bar, so I don't like entering there. So you would probably want to wait and see if you get a higher low here that still gives you room, but just your higher low doesn't come till here, and now you don't have any room. And just no good place to enter here. You can't really rely on second entries and failures in these little ranges like this because you just get whipsawed. And so really your only entry is at the lows and at the highs, and you're not getting anything here. You're just moving along through the middle. You're not even really getting back to the highs or lows. It's just tightening up. So you might could have said long here, because by that time, I'll just show you this real quick. It's probably better just to stick this one out. But notice what happens. You just go into a tighter range here. And so right here, you do get a chance to get in at the low, and you probably got enough room to scalp out there. So that's one that you could be a possibility. So just remember that, there's ranges within ranges, there's trends within ranges, there's ranges within trends. And that's why price action is, works, and why it's so, works on every level and so forth, because you see the same things over and over, and you see these different patterns within other patterns. So, and all this is, even out to this level and this level and this trend are all within a bigger picture that looks like a bigger range really early on. But anyway, I don't want to get off on that. But notice we work up. I didn't draw the trend line, but there's a little trend working up right through here. And you actually break higher here and turn down. Being that far away from the EMA, that's another one that could be green. I didn't mark it. Your lower highs right here, right into the EMA, right into a double bottom. You can't enter there. And we talked about this one. This was the failed second entry long. And it is off. It does confirm that trend line. It is a breakout pullback short. It is a huge bearish bar. It broke higher, turned, and went down. So you could have gone short there. It's a little iffy because there's a lot of support. If you move this line down, you can hopefully see that, all that support. I'd probably place this line right there. That's where you get the most, actually maybe a little higher, the most touches counting the closes. And really at this point, you'd probably have it right here because of these last couple of closes. And you can see you're going short right into that. Doesn't matter in the end, but you don't know that ahead of time. So just something you got to be aware of. There's better trades than that, basically, is what I'm trying to say. And so notice your new low, and you come up and you get a first entry, try to go higher again, and you get a second entry short right there and a nice bearish bar. Boom. Nice short. It comes back, gives you a failed second entry long, and we're looking for this to possibly make a new low, so I like that one. And this is a good example of, there's plenty of room in there to scalp out, but it didn't get much more than that, and then it bounces, and it would have stopped you out if you had your stop one tick above that, which is where it goes. So we're just kind of working sideways again there. If you didn't enter on these two, I definitely wouldn't enter anything else across there, because you're just kind of going sideways now. Now it's getting iffy, but then it drops on down. First entry, second entry short right there, another bearish, very bearish bar. Failed second entry long here. It confirms that trend line. Another good short. You actually come back to trend line again, but you're away from the EMA, you're going short right here. This actually broke higher and turned and went down. In that case, you might mark that one green. I'm not marking it, but you could argue for it to be green. So then we bounce. First break of this, although we had a break of this one down a new low. So we may reverse here. But this one comes up, you get a close outside, new high, and then it's going lower. This is a trap. Notice that new high, and then you get a first entry, and you turn down, and a second entry, and it fails. So there's a failed second entry long there, and the trend is still down at this point. We're still, even though we got a little bounce here, we've still been trending down. So with that being a trap and plenty of room to get out, even to this one, you may take that trade. Of course, it does bounce here. Look how it shoots right back through the EMA, makes a new high. That's a good, strong signal. Comes back. This is actually an outside bar, but it actually went lower here and turns and goes out. You may take that trade right there because that's a strong reversal. For it to shoot through the EMA and not even check up and then come back, and it actually made a higher high. It didn't really find any resistance right here either. That's telling you that strong buying's come in the market. So normally you'd want a second entry here, but you could almost argue for this to be blue the way it's set up there, because you're going to at least get a second entry, I'm sorry, a second leg most likely. So you get one leg, pull back, and there's a second leg. So then there's a failed second entry short right here, and there's actually a second entry long. I didn't mark this one. I probably should have at least marked it green, but if you see that this is a failed second entry short on this bigger picture, it is a confirmation of the trend line, and it's a second entry long as well, then even though that's not a perfect signal bar, you may take that trade because of the fact that it's probably going to trap some shorts. And you know it trapped people by how quick it shoots out of there like that. Runs up, pulls back, breaks the trend line right there, or at least you get a convincing close outside is the way I really should word that. We run up, make a new high, and then we're headed down again. You don't really get a good setup here. You might look at that as a failed second entry long. Notice that new high, first entry, second entry, and it's a relatively small bar, but we're still above the EMA. You don't really have a good reversal pattern. That's a little bit congested, but that's another one you could argue for to be green. But there's a double top there, and then a first entry, and then a second entry right here, and this actually broke higher and turned and went down. I like hitting that on your trap right there, and look at it go. And then notice you make a new low, first entry, and then right off the trend line again, second entry short, nice bearish bar. Doesn't go far before we're working sideways again. And there's a second entry short right here, not a very good one. And here's another one that I didn't mark, but notice that new high, and you go first entry and then second entry, and it fails. And there's really a technically this is not a second entry, but notice there's one, two. It's like a little two-legged move, but I wouldn't really look at it that way, because here's your low, and that's a first entry, and really your second entry was right there. And then this looks a little congestive. I didn't mark it, but this is another one that you might argue for a failed second entry long after a downtrend when you're looking for a new low. So it runs down, makes a new low, first entry, comes back to that same breakout area right across there, and gives you a second entry short and a nice bearish bar. Runs down, and now you get a double test off the low, and you can tell you're going sideways here now. Notice we made that low here originally, and we went a little lower here, but it's still, this is a double test, and this did break lower and turn and go up, so you could have gone long right there, one tick above that. I don't know if I'd have waited till right here, because now you're getting long in the upper half of the range. So if you didn't go long right there, you may skip that one. Even right here, I think you still got enough room to get out. I haven't counted them. I'm not 100% sure, but I wouldn't take this one unless I went long when it broke back above this bar right here. And of course, we drop back down and fail, turn up. No setup down here though. come back. This one was tempting because but it's just got a little bit too much stem there. It's bearish still, but I'd wait on a better setup. And it comes back, test it once, turns down, comes back a third time and tests that level. And this actually broke higher, turned, and closed on its low. That's a great place to go short. You would think it would at least come back down here. That's your expectation, but it bounces early and runs higher. There's another second entry short up here, but not a very good setup. Lower high here, again, too much stem there, not a really good signal bar. But you get back inside the range here and get a failed second entry long, and it actually went higher and turns down, but you could have just waited for that bar to close and gone short right there. It kind of starts chopping around, but you would have already been scalped out by that time. Continues to work low. There's a lower high here after a double top, but again, you're in the lower half of this range now, and it just gets dangerous entering that close to the low. It still would have worked, as you can see, but I wouldn't take it. In fact, I like going long down here because you just bounce down here again, and that's a double top, so a new high, first entry. So there's two legs down there basically. We run back up, no setup here, run back down, no setup really right there, and then you get a double test that breaks lower and turns and goes out the upper side. Again, I wouldn't wait till here to enter, but I wouldn't have any problem going long when it went past the top of this bar, just having to stop there. And that was another quick, easy move. And then finally we bounce out of here, and we're heading higher. This is just too congestive right here at the highs of that range. Finally push on up here, pull back first entry, and there's a second entry long right there. But again, you got a bunch of dojis and a little congestion, but it shoots up and makes a higher low right there in a nice bullish bar. And you can see everything closing up above that EMA. So I like that one. Runs up, makes a new high, comes back. Again, you don't really get a good setup here. On this second entry, there's a new high right there, first entry. And even though it doesn't make a lower high, when it breaks above, there's a second entry right there. So that's another one you could argue to be green. Of course, your stop has to go below this bar because it makes the swing low. But I'd just skip that trade. I don't really like it. You don't know that all this is coming here. And it's just hard to get a good read on this thing because you've already had a break and a new high, and it could actually turn down right there. So I'd just stay out of that. Of course, it does run on up, and then we just start going sideways again. You got to be careful going short up here, and I don't see any real good longs until right here when you finally make this high first entry, and you come down here and you get a second entry, and you get a little failed break lower right here below this support resistance line. So I like that one, and if nothing else, just to try to ride it back to the EMA. You get a higher low here, but you don't get a setup. You could argue for a reversal here, but again, now you're almost right back into the highs. And you can see how it's finding resistance right there. It does break on through, but you don't know that. So once it breaks through, you're really looking for a short. You could argue for that one, but with this thing being this strong a move up, even though you got that measured move still pointing way up higher, I'd be careful on my shorts right here. I'd want to wait on a lower high probably. That's one you could argue for that to be green, of course. This one, just you got to skip it because now it's just congestion. Look at the dojis in there and the stems on both sides. But you finally get a reversal right here on a failed second entry long. And so I like that one. Just, at this point you figure it's probably going to ride back into the range. And it does drop down and give you a lower high off of that failure right there. And now you're back in the range, and another real bearish. And notice how it pushed down below that kind of support there. It's like a little breakout pullback short. But most importantly, you're back in the range, and now it's acting as resistance again. So it gives you a good setup there. Quick, easy move. Bounces early though and takes you back in to the 2 o'clock hour where that's the end of the day, and then off it's gone again. I mean, we had another huge, well, I say huge. I mean, it's still a pretty good move. It's not like what we had the other day after 2 o'clock, but really from 2 o'clock on, we ran from about 30.93 to still about a 40-point move. So still a nice move. But anyway, back out again just so you can see the bigger picture. You had that spike and channel up. Then we had a correction here. There's really two measured legs, and then we tried to go lower again, and we just ended up going sideways before we made that next leg up. So nice day. Volatility continues to be high. So, you know, be a little more choosy. There's going to, as you can see, there's plenty of trades, and again, there was others that I didn't necessarily mark that you could argue for. So you can afford to be a little more choosy on days like this. Wait on the sure things, because if you're not sure what the price action is telling you, and it's really hard to know in here, starting to know in here until you get in this range, and even then it's undecided, but at least you got the range to work with and you can use the Ranger rules. But it's hard to know exactly what the price action is going to do there. Are we going to go lower from here? We're going to go higher. So you just trade the rules on the range and you're going to probably be all right, but you don't know that it's going to go higher until it starts to make a new high and continues on. Then you got to assume, hey, we're probably going to play that measured move. So if you're not sure what prices are doing, like when they're down here bouncing around, and you take some oddball trade, you're just gambling. And gamblers don't make it in this business. I tell people all the time, if you're guessing, you're gambling. If you're not 100% sure and comfortable in your read of the market and what it's about to do, and you take a trade, well, you're just gambling. You're just throwing darts at a board. And I'm going to tell you, gamblers do not make it in this business. You will fail, and you will fail miserably. And I've had a couple of people tell me that lately, that they failed. I had an email today from a guy that said that he failed miserably today. He didn't go into any details or anything, or I'd read what he'd told me, but he didn't give any details, so I can't share them with you. But I know he failed miserably, so that's all I can tell you. I will read one other email here that I got from a gentleman that sent me. He actually sent me this a week or so ago, and it was on a Friday, I think. So, and I don't do videos on Fridays, but I saved it and I just kind of overlooked it, and then I was kind of cleaning out my emails today and saw it. So I'll share what he wrote to me, and this is, I think this was last Friday, but it was just recently. So, but it says, "Hey Mac, I wish all days could be like the last few days," and he put high volatility in parentheses there. He says, "I took a few extra trades. Everything played out very well this morning. Time to enjoy my weekend. Thanks for all the work you do on your videos. Watch them every day. My goal is to trade 3 contracts. That's why I sim trade 3 contracts to get used to it. I'm up to $10,200 total profit so far. My goal is $20,100, $300 a day for 67 days. Today will only count for $300 total, like every day. 2 points, 3 contracts, $300. Thanks for all you do. Have a great weekend." So he's still sim trading. So, but if you can do this sim trading, eventually you can do it live. The only difference between the sim trading and live, the only difference is in your head. So you got to get it right in your head. But if you can do this sim trading, there's no reason you can't do it live. No reason at all, because you're doing it. It's the same. You're trading the same data. You're trading, what you're watching print in real time is the real thing every day, unless you're on some simulated data or something like that. But this stuff is too accurate today. They've got it down where it's, it's basically real trading, because you're trading a real chart. You're just not using real money. So what I tell people is you want to be able to double or triple a $5,000 to $10,000 account on the sim, and if you can do that, following the rules and doing what you're supposed to do, you'll know you can't fool yourself. You might try, but if you're doubling down and letting prices run and come back and getting lucky like that, then no, you're not. You got to do it the right way, following the rules. And if you can double or triple a sim account, following the rules and trading like you're supposed to, then there's no reason you can't do it live. other than what's between your ears. That would be the only thing to keep you from doing it live. And don't get me wrong, there's some people that can't ever solve that problem between their ears. Most do eventually if they get that far, but some people never do. And so I don't want to mislead anybody that just because you did it on the sim that you can do it live, because some people never solve that issue between their ears. And it's basically that little voice in the back of your head that talks you into the worst trades ever and talks you out of the best trades ever. It happens to me. I had to fight that same thing. I still have to fight it today. But at some point, your mind has to be stronger than your desire. And when you get to that point, then you solve that little voice in the back of your head and that problem between your ears. You can handle it. But not everybody gets there. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.